friends of mine just did they did the escape from Alcatraz triathlon 2 weeks ago. And
I did that. I mean,
yeah,
I did I did the bicycle portion of that. I teamed up with some of my Tuttle and Company pals, hedging pals,
mhm.
and one guy did the swim from the barge uh, off of Alcatraz, and then I did the bike, and then another guy who now works for Goldman Sachs did the running part. It was good.
Yeah, my
Yeah.
buddy said it was brutal. I mean, and these guys do full Ironmans and they do the half Ironmans, and he just said the hills. He's like, imagine just running straight up a cliff. He's like, that's what it felt like at least. Now we're
Yeah.
also Floridians, so we're used to flat.
Yeah, the swim is interesting because they tell you before you jump into the water, look, aim for that and you will end up,
Yes.
a couple miles away, but you'll end up in the right place. So, yeah.
There we go. They're not going to be able
Kind
to
of
do
like, it's kind of
that
like
though
it's kind of like
today.
mortgage banking, right? You mortgage bank, you aim for some place, then you end up like somewhere else.
Wherever the market takes you. Yes.
And Dustin, you are Orlando, right? And
Yes.
I see the UCF. I forget year we talked about this before. You're a huge UCF guy, right?
I'm a big UCF supporter. It's funny, I wasn't. Like I grew up a Florida State fan. I
Hmm.
grew up in the 80s and 90s. So in the 90s, Florida State was dominant.
Yep.
I got into Florida State, but for life reasons, I went to UCF.
Hmm.
UCF allowed me to work from home. Wow, it allowed me to live at home. It allowed me to work virtually full time, and then allowed me to commute back then. It still is a huge commuter school. And then there's a time about 2004. These three things happen all at once. UCF hires George O'Leary to be the head football coach. UCF is actually getting a on-campus stadium, and
Hmm.
Florida State started their nosedive into being one of the worst teams.
The
And
Bobby.
I said to my wife, you know what? At some point, I should probably start supporting the school where I went, not the school I grew up. And ever since then, yeah, we're all in. Like yeah, almost as all in as you can get. We're all in.
It's Lane Kiffin still down there?
No,
Uh,
Scott Frost.
oh, Frost. That's right. Yeah, Frost.
Frost is back for his second go round. Lane Kiffin was at FAU before he went to Ole
That's
Miss.
that's right. Okay. All
Yeah.
right. Yeah. So
And
cool.
you're an OH guy, a big Ohio guy there. You
Um,
got the Indians, you got the Buckeyes. There we go.
well,
Yellow Jackets.
Some
Wow,
some would say
Mark's a
there's
smarty
not much
arty.
else to do in Ohio except, watch
drink,
sports,
drink in
watch
West.
somebody else play sports.
Yeah. So
Although, Dustin, have you been invited to Rich's wiffle ball tournament coming up?
No, but that is right up my alley. That is, yes.
Every
Okay.
time I bring it up, Rich just kind of giggles and then changes the subject. Like he doesn't want.
I'm trying to pass it off right now. Like I've been running it. I run the world's biggest wiffle ball tournament somehow for the last
Oh,
11.
six teams, six teams.
I wish it would be a lot easier. So yeah, we have about like 200 teams come in from all across the Midwest. It's crazy. It's a 4-day event, like a big festival. It's nuts.
And is ESPN now covering it? Because I see that ESPN has wiffle ball.
They do. Yeah. It's the guys that they cover actually. They won. They were in our tournament in the early years and won their age division like 3 or 4 years in a row. Then they started their own YouTube thing and it got huge and they got too big for our tournament. But it is an emerging thing. So, but yeah, that's
Yeah, no,
upcoming.
I know of Rich and his baseball cards and that, massive following that he has, but the wiffle ball is no, I'm new to that, Rob.
I'm trying to pass it off right now. It's just something's got to go. But
When is it, Rich?
it's mid August.
When is it? I'm sorry, you cut out.
Oh, middle of August. Yeah, it's like August, like 12 or 10 to 11 to 14, whatever that weekend is, that Thursday to Sunday. So
Plastic bats.
yeah, yeah. If anybody's morbidly curious, World Series of Wiffle Ball.com. It is a crazy event that is a lot of fun. Yeah, that draws in. I mean, we have, I mean, like 10,000 people at the park over the weekend. It's pretty crazy. So
Hey, Mike Metz wants to know how many wiffle balls do you go through in the tournament?
it's a good question. We order, oh my God, I'm trying to think now. 20 cases of 24. We order like 30 to 40 cases of 24 wiffle balls. So whatever that is, seven, 800.
Yeah.
Yeah. So, yep.
Wow. Who's your biggest sponsor? Can you?
Yeah, well, every year it's different. We lean on as it's gotten bigger. We've gotten like a title sponsor, and people come up and like set up at the park for all 4 days. So it's evolved. We have a lot of sponsors. The biggest one's always the title sponsor, and it's been different every year.
I
Okay.
So
think this year it's going to be depth.
never know. So, well, good.
Actually, you know what? You should have United Wholesale and Rocket.
Have them both come out and sponsor. Ishbia
Right.
would probably want to play. Is
Well, I was going to say, Ishbia probably already has a team. They probably already have their own field. They're already practicing. Yes.
exactly. Show up in like cleats and eye black, and I could see Ishbia doing that. But yeah,
You know what? I think I'm gonna write to him
but the
and
tournament.
ask if he wants to play.
Ask him. I can't see it happening, but it would be funny to, I guess you probably wouldn't get a reply back, but so
No, I would get a reply back, but on second thought, I wouldn't want him screaming at me in front of, 2,000 other wiffle ball people are out there just to have fun.
great.
So,
How many fields do y'all end up having?
So we build it for 8, 12, 15 wiffle ball fields. So it's a park that has like four big baseball diamonds, and the outfield fences of the actual baseball diamonds are the home run fences, and
Okay.
home plate is like a little into the like outfield grass. So we set up the wiffle ball, like it's four wiffle ball fields in like a full-sized baseball outfield. So you have four fields in each outfield, and yeah, it's crazy. If anybody like we have like everything is on the website, like the rules and the field dimensions. We've had like a ton. We've had probably just that we know of like 15 to 20 like copycat tournaments that have spawned these last like 5, 6, 7 years. So it's been pretty cool. We get a lot of media coverage locally, and it all raises money for, yeah, nonprofit, the local youth baseball league. So like our youth baseball program, we built a whole new baseball field with like the proceeds from like the first 5 or 6 years, and all kinds of new equipment and field upgrades. So it all supports the local baseball program, which is super cool.
training for Rich's dog.
Right, exactly. Yeah, my dog, Fart, he caused a scene at the event a couple years ago because he attacked our other dog. Like it took like two grown men to break up this dog fight. It was during the 7 to 9 year old championship game. People were horrified.
I
It
don't know
caused like
what's
a
more
6 minute delay. It was, yeah.
I don't know where I'm more concerned, the fact that your two dogs who live together are out in public space fighting, or the fact that
Yes, exactly.
you named your dog Fart. Like,
Yes. The funniest part is the other one's name is Dog.
I thought it was Frankie.
Well, Frankie is Fart, but nobody calls him Frankie anymore. Occasionally when I get really mad, I'll, like the parent thing, I'll still use the first name, but I'm mad at him very frequently, so it's a common event. But yeah, it was so. Yeah, of course, that dog fight. If you've ever seen me on LinkedIn, the marketing for the football tournament's very similar. It's a lot of just ridiculous, like fake news stories, and just
Yeah, was somebody on the 7 or 9 year old team like taking bets? Like did a betting ring set like you know appear out of nowhere?
it's not on the dog fights, but there have been some wagers on the games, including the 7 to 9 year old games. But I can't formally speak to any of that. It's just speculation. So, but any underground betting markets on 7 to 9 year old wiffle ball, we could never, of course, could officially endorse that. But I,
Wait a minute, wait a minute. This could be like a few good men scenario with Rich, aren't you in charge? Don't you know everything that's going on?
it's like the mafia, like arm's length. Like my capos. I don't want to know what they're doing. I don't want to know about their
Uh,
drop offs, or it's the less I know, the better in some cases. So.
like the mortgage business.
Good segue, Rob. And let's go ahead and get into it. This is the big picture presented and sponsored by our friends at Depth. 20 years of so ably serving the mortgage industry, the fintech industry for public relations, brand management, strategic communication. Depth PR, you can find them at depthpr.com. And if you need your story told in the mortgage industry, and most companies in the mortgage industry are horrible at marketing and storytelling, I give Depth a call, honestly, because they do a great job. Rob, did you have something to say?
Work with other industries, right?
Yeah, yeah. They're in the fintech space and yeah, so in some other areas. So they do a great job. So and as always, pleased to be joined my esteemed colleague and co-host, Rob Chrisman. Rob, you got the polo field in the background. You are San Rafaela today?
San Rafael,
San
California.
Rafael.
So, uh, a quick since we're not talking about mortgages yet, back in the 1700s when Spain basically took Mexico over,
Hmm.
they sent up missionaries and
Hmm.
they built missions
Hmm.
a day's horseback ride apart. So San Diego up through Los Angeles, San Luis Obispo, Santa Clara, San Francisco, San Rafael, and then to Sonoma, which is a little bit north of here. So there's a mission here in San Rafael, and that's where I am right now. If you'd asked me this earlier today, I would have been in St. Petersburg, Florida.
There you go.
And
And
then last night, I had the honor of having dinner with Dustin.
Yeah, what a small world, right? We have a Cali guy, a Florida guy. We knew we were doing this. This has been on the calendar for a month now.
Mhm.
Yet they seat us at a table side by side.
Wow.
It made for a nice evening, except for the point when they had to give out like 1,700 awards. There's nothing worse than having to sit through any dinner
Hmm.
where you're just watching people get paraded up on stage like cattle to get their $17 plaque or trophy and then shuffled off stage for the next one. But my company was really good.
Did
That's
you did you stay for the entire awards ceremony?
Yes, yeah, I stayed. They probably ended only 20 minutes after you left, and by 9:30 I was in my car heading home.
All right.
And our guest this week, the Senior Vice President of Growth for Lower, also the creator and host of TLOP, the
Yes,
Loan
sir.
Officer Podcast. It is our friend Dustin Owen. Dustin, great to have you on the show. Thank you so much for making the time today.
Yeah, I'm excited. I'm actually honored. I feel like in a way I'm being accepted by the cool kids right now. So it's been a long time coming. I think the younger generation knows me and they know me well. I think my peers in the C-suite, they know me for my previous roles outside of content creation, but I think the content creation side of things is still a little bit new to them. So thanks for having me.
That's great. And so,
Normally, Dustin, just so you know, normally we don't blow through literally a third of the show talking about, wiffle
Wiffle
ball
ball?
tournaments or whatever.
Rob, you
So
probably don't know this because I don't know if my style is quite the Crispin flavor, but our fans of our show will hate on us because I'll do a 30-minute podcast episode. It may take me 7 minutes to get started, right? Because I want to talk about current events in life and what we did that weekend and what's going on in the world around us. And everyone else is just there for some free coaching or for some free training. And I refuse to change. So you all talking about wiffle ball is kind of right up my alley.
no, but you bring up a very good point, and that is because residential lending is so diverse and it touches so many lives that so much of life impacts people who work in residential lending and vice versa. So I don't mind talking at all. I mean, seriously, when we're done, I'm going to find out, I'm going to go to Rich's website. I'm going to find out when that tournament is. And if it works in my calendar, I am going to write to Matt.
Nice.
I love it. I love it. Good stuff. And Rob, where do we start this week? As always, as recently, a lot of news to sift through. We got the Trump admin taking a look at LO comp and the servicing rules, the battered shell of the CFPB and the OMB, taking a look at all that. More M&A. Fairway picks up Hallmark out of Indiana, and Home Express purchased by Chimera. So a couple of relevant acquisitions in the M&A space. And then probably most notably this week, a couple of really good inflation numbers, back to back, CPI, PPI, both coming in tamer than expected, Rob, which begs the obvious question, now that Trump has fixed inflation, are you ready to get, on the lower J Powell lower rates bandwagon?
Dustin. So what happens is, Rich throws these things at me, and I pick the easiest one. Uh, so let's talk about inflation, uh, or let's talk about M&A because inflation's easily dismissed. So inflation, Rich, I believe that so much of the purchasing was done prior to the installation of the tariffs, and I don't even know the tariffs, they're on, they're off, they're delayed, they're brought forward, they're announced, they're removed. I don't know where tariffs are with any particular product, but I believe, Rich, that a lot of the purchasing managers who were out there front loaded their purchases for the year, trying to estimate how much do we need over the next several months. Let's buy it now, or at least order it now to avoid that. So the economists that I've kind of tuned into recently, or last, this week, and even last month or so, have said the full impact of the tariffs, assuming they have a full impact, or aren't negotiated away, aren't going to appear until later in the summer. So that's that. But yeah, it's nice to
No, they
see
won't show up in the Fed's data till what, like next spring?
next
They're.
spring. Uh,
I had to make a Fed
we should
outdate.
get we should get Jerome Powell on this show,
I
or at
don't.
least
If he would better not come on this show. He really is stupid if he comes on this show. Jesus.
we might be able to get John Williams. He spoke at the NBA event. But anyway, let's talk about M&A briefly as well, because you're right, Fairway and Hallmark inked a deal, and and my commentary I've been writing, there's M&A continues, and there's no reason for it really to stop. I would expect, and in talking to Garth Graham at the Stratmore Group, we're close. They've got Stratmore has deals in the works. We can expect to see mergers and acquisitions, into the future. There's no reason for them to stop. The general feeling, and Dustin, you might be able to, or you should correct me if I'm wrong, but in my recent travels, it seems like things continue to be slow. Rates are where they are. The spring home buying or the summer home buying season hasn't quite kicked in. In fact, inventory levels have been increasing. And so lenders are looking around saying, well, is this all there is? And are we stuck around $12,000 cost per loan? And really, is this really what I want to do if I'm 70 years old and I've had this company for 20 or 30 years? Or is there somebody who can, take me out of this, that'll help my employees continue to do what they do, and I'll go play with my grandkids. So for various reasons, people will be looking at an exit. Maybe they're just tired of the business. Maybe they don't want to wait for another business cycle. Maybe they want to play with their grandkids. So the mergers and acquisitions, I see no reason for them to stop.
I would concur with that, Rob. I mean, the market is soft. I mean, unless you're in Chicago, Massachusetts, the rest of the market's either flat or severely soft. I would call Florida severely soft. I'd call Texas severely soft. And the P&Ls, when you study them, they're not fat. In fact, I think the NBA data from Q1 was yet another single digit negative. Coming off of Q4 was probably a single digit positive. And there is no reprieve for Q2 and Q3. And if it is, you're talking single digits, right? You're talking 3, 4 bips in terms of, average net profit. I would only anticipate that the M&A activity is exactly what you and Rob discuss. And obviously, I mean, you and Rob, you and Garth discuss. And, you know, for me, Garth has always been that go-to resource for things M&A. Um, sounds pretty accurate. That's what I'm seeing. It's what I'm even experiencing.
Are we seeing, you think, Dustin? It feels like we're what we're seeing, what we're in the midst of is like a hollowing out of the mortgage industry, where if you fast forward a few years, the big are going to be bigger. Those medium-sized IMBs, probably not going to be as many of them, but I feel like it opens up opportunities for small, nimble lenders as well. And you have a lot of big public, bureaucratic mortgage companies that are kind of being assembled right now. What's your take on just the competitive landscape and what's happening with it right now?
Yeah, so I love this topic. I've covered it several times, and it's interesting. I'm sure y'all have done the same thing throughout your careers. I covered it a year ago, I covered it 2 years ago, and the way I cover it today is probably gonna be a little bit different, yet similar. So I view what's happening as a changing of the guard through and through. I love what I get to do, or maybe even the seat I get to sit in the industry is one in which I can be a bridge between the old guard and the new guard, and really try to help shape the future of mortgage lending. 2 years ago and 1 year ago, if you asked me, I would say there's going to be two people left in this industry: the mega top 10 or the small, nimble boutique. And I
Mhm.
didn't think there was much room for any middle ground, right? So if you're doing a billion to 10 billion, I felt you're most susceptible to either be acquired or be forced into some kind of a merger because you were a big boy without the big boy volume, meaning you couldn't drive your production costs down low enough and you couldn't afford the tech spend that's going to be required to do things at scale. So then your play would be, hey, I'm going to be super nimble, I'm going to be boutique, and I'm going to dominate my couple local markets that I'm in, or I'm going to have to go really big. The only thing that's changed, because I still believe that, I don't know if my convictions are as strong as they once were, because I'm now starting to sense, what if tech itself becomes so cheap and so readily available? A year ago, I wasn't looking to ICE to be my solution for tech. Like, I wasn't. I was looking to remove myself from ICE to build my own tech, but only if I was big enough and I could afford to do so. But if I fast forward 3 years, my new what if is, what if tech is so cheap and so easy, we all have access to it. At which point, maybe I'd have to dial back some of my vernacular, my take, because maybe there will be a spot for those 3, 4, and $5 billion operations to operate. um, well, I guess right, only time will tell. Rob and I were talking about this with the swim from Alcatraz. We know where we're pointing. We just know that wherever we're pointing is not where we're going to end up. Time will dictate where we end up.
Anything you're seeing in the marketplace right now, Dustin, like that you don't think's getting enough attention, things kind of happening maybe behind the scenes or really dialed in professional in our industry? Anything that the market's not seeing that's not getting enough attention?
Yeah, and I would say this is more to the executive leadership team. If they're not taking the advent of AI in all facets seriously. Like, I know they're trying to solve for AI as it pertains to maybe QC and QA, or hey, let's upload the Fannie Freddie selling guide so that we can create a little widget so our loan officers have a new tool that they can go to. But let's go to the front end, the consumer facing end, the virtual assistant. This person can make dials for me. I'm afraid that some of I joke when I say this, but your pale, male, and stale, your old guard
Hmm.
is not wanting to look that way. And maybe it's a compliance issue, a regulatory issue. But if we're not going that way, I think we're missing the mark. And on a sales and marketing aspect, I do believe for the first time ever, we are racing to the consumer. I don't think we're racing against the real estate community. I think we're racing with the real estate community. But it's like, hey, whoever gets there first, hold my seat. I'll be there in a minute or two. So I would like to see there be more emphasis on from a consumer facing standpoint, what are we doing to make sure that the technology we're leveraging for sales and marketing is extremely AI enabled, and the type of strategies we're deploying is one in which we're focused on getting the consumer first, even if we didn't have to the past 30 years.
And then one more I wanted to ask you right out of the gate, and then I wanted to get into TLOP and lower a little bit. But the real one thing I'm seeing just with my clients and just across the industry, the real estate and the mortgage parts, obviously, like the Redfin rocket, that's obviously big headline news, but more granularly, seeing a lot of lenders that are either going down the road of, offering buyers agent services, trying to figure out how to do it, hiring real estate agents, getting them licensed, maybe having them act as LPAs on their deals with the optionality to, you're seeing a lot more of that. Real estate brokerages, there's a lot of MSA stuff out there, but they're starting to look at the lending side a little. How do you, the NAR settlement was now about a year ago, and I don't think we haven't seen as much of this yet that I would have that I did predict a year ago. But I think it feels like now there's more momentum in those spaces. Is that what you're seeing? What's your thoughts on that issue, just more broadly?
Yeah, Rich, that's a lot to unpack. I was actually hoping Rob was going to jump on the Elo comp prompt that you threw him because if you wind me up and let me go, man, oh man, have we just turned a blind eye to the massive Elo comp violations our industry across all facets has been doing, and it's only been perpetuated over the past 3 or 4 years. My stance has always been if we have rules, enforce them or get rid of the rules.
Mhm.
So with the new news, it kind of excites me. I know that those that run companies and regulatory governances and the technology that has to regulate it, I'm sure they're not excited about possibly dialing back or eliminating the rules that were set forth by Dodd-Frank. I would just like to have some kind of a definite answer. Either we have rules and we follow them and they're enforced, or we revert back to the way things were 15 years ago. All that said is going to allow me to back into answering, I think, your question. I am starkly against onboarding a real estate agent as a licensed loan partner and paying them a commission. That is to me an absolute slap in the face of RESPA Section 8. I just personally like, don't hang me out to dry, but not my cup of tea.
Mhm.
MSAs, strategic partnerships, by all means, if there's a legal way to do it and we can audit it, let's rock and roll, right? It's kind of like college football and the NIL. We're not putting that cat, back in the bag. It's out. So let's just put up some guardrails and make sure that we're doing our proper audits. A realtor wanting to become a lender or a lender wanting to offer real estate services, I don't think we're there yet. I prefer people stay in their lanes, know their roles and play it. And it's like, be the best dang real estate agent you can be and serve the most families. Be the best dang lender you can be instead of trying to half-ass it and do a little bit of this, a little bit of that. I mean, I'm not going to hate somebody who's trying to provide for their family, but you asked the question. I'm not seeing a true lender offering real estate services, at least in the scope where, I stay a lot in the Southeast. I get a little bit west into Texas and Colorado. I don't get out to the Pacific Northwest or California. And California, as Rob can attest to, tends to lead in many things.
Mhm.
So, if it's being done in California, it hasn't made its way to the Southeast just yet, but I'm not seeing that on a large scale or even a successful scale.
Rob, your trials and tribulations across the country in the industry, the real estate, mortgage, crossing of streams. What are you seeing, hearing, thoughts? Not much.
Sporadic.
Hmm.
Uh, yeah, I'll echo what Dustin was talking about. It's not, you can't fault somebody for trying to provide for their family and when things are slow, but it's a different skill set. A lot of loan officers I've asked about it say, you know what, I don't want to get a call at Saturday night at 6 o'clock, trying to negotiate some purchase contract or put an offer in on a house that they saw that day. They just don't want to. They just don't want to. And so, and you have to respect that. I mean, people need, work boundaries.
Hmm.
And real estate agents, I think that people tend to tread more on real estate agents' schedules than they do loan officer schedules. So, they may not call the loan officer after 5 o'clock. Uh, or on weekends. Whereas a real estate agent, I think people think nothing of contacting them during dinner or anytime during the weekend. And so I would think that even the people who have ventured down that path, maybe they get burned out by working 7 days a week, 12 hours a day. And it's hard to draw the line. So but basic answer to your question, I haven't seen it take off like some people thought it might,
Mhm.
say 6 months or a year ago.
Yeah. This is the big picture presented and sponsored by our friends at Depth. And Rob and I this week, very pleased to be joined by the Senior Vice President of the Growth at Lower and the creator and host of the Loan Officer podcast, TLOP, Dustin Owen. And Dustin, tell us about TLOP. It is, one of is it the most listened to podcast in the mortgage industry? Do
Look, I would like to believe so.
Mhm,
I'm sure Carl White and I would have to get out some data.
mhm,
Obviously, what Logan and the whole crew over at Housing Wire do.
mhm,
They have probably a whole separate audience through the Housing Wire. But when it comes to the mortgage industry, mortgage originators, I can't imagine with our million plus downloads a year that there's someone with more views or listens. So I like to say the most popular, right? Because it's really hard to quantify popularity. But I do know we do have a pretty active audience, and in a way, I still believe like we're the best kept secret in the industry, because it's my way of bringing a little bit of the street with a little bit of the boardroom to the masses in a manner that it's pretty free in thought, free in flow. It's not stuffy. So yeah, that's the show. We've been doing it for 5 years. Why I started it, we don't have enough time to do a deep psychoanalysis into me, but what I can tell people is, I grew up in this industry as a loan originator. I was able to take that experience and build out $1 billion division and, do some awesome things with the Mortgage Bankers Association. And, I kind of got to see the full scope of what it means to run a mortgage company. And this industry means so much to me as a child of a school bus driver and electrician. I learned about life because I became a loan officer. I learned how to sell, I learned how to market. I learned how to invest in real estate. I learned how to invest. I learned how to not be a financial hot mess when it comes to personal finance. Like this industry taught me and gave me way more than I ever thought or could it thought it could do. Um, and I'm eternally grateful. So the podcast was my way of saying, you know what? Let's spend 2 hours a week where I can be a little bit like Joe Rogan, a little bit like Dave Ramsey, and let me teach everything that I learned because I became a mortgage loan originator. And from there, the show took off. Now, obviously, you give it a name like the Loan Officer Podcast, you're going to attract loan originators. But if you go back to the first couple hundred episodes, yeah, the episodes were not specific to mortgage. They were more specific to mortgage in the communities we serve. And look, I grew up loving Clark Howard. I grew up, like, I once tried to get Clark Howard to hire me as an intern when I lived in Atlanta. I respect Dave Ramsey. I was listening to Susie Orman. I was reading books by Peter Lynch as an 18-year-old, trying to find this knowledge that I wanted. And as a 40-year-old, those people weren't existed. Like they were around, but now they're in their 60s or 70s. So my goal ultimately was, well, how can I give back to the younger generation? And I chose to do so through a podcast format because quite honestly, I sucked at doing YouTube videos. Like that's how I got into podcasting because I tried doing YouTube videos for 100 days and it didn't go too well. But I learned that if I grabbed a co-host and we did a radio show, that would probably be a better platform for me to teach all the lessons I learned because I became a mortgage loan originator.
Love it. And Dustin, just like the importance of building a personal brand and a following, and people finally, starting to understand the importance of this in today's business world. You've done it as good as anybody in our industry. Any advice to the LO or the young mortgage professional that's out there listening about like how to build a brand, a platform, and the benefits that it spawns for the time that you put into it?
Yeah, so Rob and I share in this. And by the way, Rob's the OG, right? I mean, Rob starts writing a email newsletter that
Mhm.
takes off back in 2008. Then you had guys out in California like Frank Gray and Brian Stevens with Think Big, Work Small.
Mhm.
Um, where what Rob and I agree upon is you do, and you do again, and you do again, and you do again. My favorite number these days is 41. That wasn't my baseball number, it wasn't my football number. But 41 is because it took me 41 episodes before I ever figured out, like, oh, that's my voice, or that's a good cadence, or oh, I kind of feel like I know who we are and what we're doing. It took 41 episodes before people started to notice us. So now when I travel the country and I speak on big stages, I'll ask the audience, like, what are you willing to do 41 times before you'll ever figure it out? Like I joke, I go, I'm not even as good as the WD-40 guy because he figured it out after 40 attempts. It took me 41 tries, and even still, that was just to find our footing. So my advice would be if you want to do something, then do it and trust that you'll figure it out. I think too many times in life we've been taught ready, aim, fire. And I don't think that's how life works. I think we fire, then we're like, crap, ready? And then you'll start to aim the more you do it. So embrace that. Embrace it's a 5-step process, and you might know steps 1 and 2. And trust that when you get through step 2, you'll figure out 3 and 4. By the time you get to step 4, step 5 will become clear. That would be my advice to anyone who's trying to get started. And then obviously, yes, you work for you, comma LLC. You
Hey,
should,
Dustin,
yeah, go ahead.
do you do loans, or have you left
So
that behind?
no, yeah. So I sold my book of business to my loan partner back in 2020. And quite honestly, it's because I was running 7 branches and we were pumping out, several hundred loans per month that it was 2 full-time jobs trying to run a personal production team as well as run 7 branches. I still manage several branches. I still have my foot in production, but no, Rob, I'm not logging into Encompass and pulling smart fees anymore.
And lower, Dustin, one of the lenders in our industry that's, feels like arrow pointing up. Just a lot of growth and some acquisitions and, bringing on people like yourself these last few years. Talk to us a little bit about Lower and what they're doing in the space and yeah, some of the momentum from these last couple of years.
Yeah, what an incredible ride. I'm 9 months into this journey with Lower. I left a company I was with for 16 years, right? So it helped grow a company where, when you onboard, you don't even have your full Eagle, let alone your Fannie Freddie tickets. And then we get the full Eagle, we get the Fannie Freddie, we do the Jenny, and just have an incredible run. So leaving was a big decision, and you're looking for a company that to me is going to represent the future. Like my eyes on 2030. I may look back in the rearview mirror for 2010 just looking for patterns or lessons, but my eyes on 2030. And I think Lower is one of these companies that they're well capitalized, right? They went and raised a bunch of money from Silicon Valley, and they have young leadership with a big vision. So you get young leadership with a big vision and you put some juice behind it with some money, and you give yourself a high probability of being able to do great things. So when you look at the company today, it's 10 years old, it's doing about $500 million a month in volume, right? So you're looking at that production in 2025, it'll probably put you somewhere around top 25, top 30. So you're not, you're definitely not a startup. But when you look at how they've grown over the past 2 or 3 years through acquisition, there's some startup components in terms of they go out and they purchase Thrive, they purchase Homeside, I mean they were Homeside, they purchase Universal Lending in Hamilton down in Florida, et cetera, et cetera. But then it's some of the big hires that they make. If you study what they're doing, they're bringing some of the best from some of the better companies to create their leadership team with the goal that we each bring our own stories, our own successes to blend into one new company, one new culture. They're trying to solve for how do we drive production cost down. Well, if you drive your own production costs down, hopefully you can put that money back into marketing or you can put it back into your rate sheet. So they do that through acquiring neat labs. And then because we do believe that the loan officer of the future is this hybrid lender, who works in a world where you're not consumer direct, but you're not also 100% traditional retail. Well, in order to do so, you have to be able to get to the consumer first. And Lower had an opportunity to leverage that capital that they're getting out of Silicon Valley, and they just made a big splashy purchase a month ago when they acquired the fourth largest real estate lead aggregator, Movoto. So it's a company
Right.
to watch. Yes, sir. See your hands up.
So I like the English language, Dustin. So when you say they bought or they're doing this or they do it, isn't it, shouldn't it be we're doing this? I mean, you're
I am.
leading the growth, right?
Yeah, yeah, you are correct. Yeah, I guess what
Okay.
I'm cautious of is I don't want to try to take credit for something that I didn't do, right? So I didn't bring the
Oh,
Movoto.
that's never stopped me, Dustin. So
Okay. Yeah, because I didn't
get
bring
on the
Movoto to
wagon.
the table. I didn't bring Meat Labs to the table. But yes, so we as a company, if we are all in the boat rowing together, all for one for all, we as a company did. Yes, when I refer to they, I'm trying not to take credit for something that where I wasn't necessarily in the room where it happens. I get to be in the room where we decide what are we going to do with this partnership? How are we going to roll it out to our branches? How are we going to use it to go out and recruit new talent? And how are we going to support it? Yes, that would be a we, or quite honestly, I might even say me. Hey, this is what I'm doing today. But they did it because yeah, I wasn't a part of those decisions.
Well, it sounds like you're very happy and very enthusiastic. So congratulations.
Thank you.
Dustin was
I
just
can't tell you. I can't tell you how many, smart questions I've asked, smart topics I've introduced, smart ideas I've had that Rich immediately takes credit for. It's, you know, Thursday nights I cry myself to sleep given the verbal abuse that I take.
It's very funny, Rob, doing the things that we do. I have been on a call and someone literally said something to me. He's like, "Yeah, have you heard blah blah blah?" And I'm thinking, yes. And I bet I know where you got it from because I shared that with only three people 2 weeks ago. And it would have been one of those three people that is parroting exactly what I shared with them. But I think you have to, every time Rich takes your thought and your idea and he uses it as his own, it's just it's a reflection of his admiration for you.
You silver tongued devil.
Dustin, uh, just talking with a couple clients this morning, like 3.5 years into a bear market, tough on loan officers right now. I almost every single one of my clients is just begging, pleading, imploring their LOs to do more to fight through the tough business climate and having to produce more outbound to get what you're looking for. Any advice out there to LOs that are, just, slugging through this bear market and looking for the winds to shift here?
I mean, look, give me '08 back. Like, give me the only benefit of '08 is it knocked us all out. And we could only do one thing, and that was rebuild and look up. This like death of a thousand cuts, stuck in purgatory. Oh my God, the goalpost gets moved every 6 months. There's a time that Barry had us thinking that May 15th of 2023, the world was going to change for the better. The only advice I have, and it's head down, blinders on, and mush. But you do have to understand that there's a little bit of a attrition going on, and it is survival of the fittest. So control what you can control, your attitude and your effort. It sounds cliche, but at this standpoint, that's about all we can do. And then look for your perspective and understand the gap gain analysis, right? Focus on the gain, not on the gap. So look at how far you've come. Don't look at what you're not achieving. And for many of us, we're in a better spot June of 25 than we were June of 23. Is June of 25 where I wanted to be, where I expected to be? No. Nowhere in my pro forma was this going to be June of 25, but it is better than June of 23.
Any opportunities, blind spots you think people are missing out on right now in the marketplace? Things people are maybe not paying enough attention to, or areas of opportunity mortgage professionals should be focused on?
the biggest blind spot was thinking something was going to change. I think, in hindsight, so to repeat that pattern, I think is not advisable. So, recognize and embrace this is the market. This is the market. The next 12 months, 24 months, 36 months, this is what we got. And then on top of that, I mentioned it earlier. I'm not a tech guy. I mean, I struggle turning on my computer, true story. But I will tell you this, I'm a fast follower, I'm an early adopter. AI freaks me the you know what out, but it also excites me. So, it might not be me necessarily that's going to be inside of that widget and programming things, but I promise you this, I am building a team right now that I'm going to find those who's, and their highest and best use is going to be in leveraging every AI tool possible because I feel like every month that passes that my team is not leveraging, I think someone else is gaining 3 months on me.
It is true. I mean, if you know how to use AI tools, they're becoming more widely adopted now, obviously. But I really believe you have an opportunity to kind of gain some ground on everybody else in whatever space you're in by, everybody should be spending at least a portion of every day experimenting with prompting AI tools just because of the damn impact is out of this world right now. I've been building two small businesses these last 2 years. It's like two employees, honestly. It's crazy the scope of it and how quick it's evolving.
Yeah, I had to do three agendas this morning. I had three different coaching calls that I had to do.
Hmm.
And this morning I woke up because I didn't get home till midnight last night, and I'm showering, I'm shaving, I'm thinking, oh crap, I have to do those agendas. Now, luckily, I had an idea of what each agenda was going to need, but I got in the office at 8:30. By 9:30, all three agendas, these are hour-long coaching calls. All three agendas were completed. They were organized with a perfect story arc, tie downs, takeaways, and calls to action. There's no way I would have done that if I didn't have Chat GPT and Gemini at my fingertips.
Yeah, love it. Well, good stuff, Dustin. Thank you so much for coming on the show. As we expected, very insightful and entertaining. We appreciate your time, and we'll certainly have you back on. Thank you for spending some time with us today.
Yes,
Rich,
thank you
Rob,
very much.
it was an honor. I'm absolutely honored and humbled. So thank you for the invite, and I look forward to being able to reciprocate. Have you on my show next time you're in Orlando. Shoot me a text. We'll make it happen.
Love it. And to our attendees, viewers, listeners, appreciate you taking some time out with us this Thursday afternoon. We do the show live every Thursday at 3 Eastern. The live version is fun and you get the visuals, and you can sign up for that at chrismancommentary.com. And if you're watching the live podcast, YouTube, where most of you consume it, you can find those on YouTube and Spotify and Apple. So until next Thursday, have a great rest of the week and weekend, everyone. And we'll see you next week on the Big
Is it
Picture
Wiffle Ball Championship, World Championship.com?
World Series of Wiffleball.com.
World Series of
We'll
Wiffle
be
Ball.
there. Here we come, Ohio.
Right, OH, so baby.
It's
So,
not even
I'm
a
gonna
real
look at it
state,
right
Rich,
now.
but we'll be there.
all right, guys, take
All right.
care. Have a great
Thank you.
rest of the week and weekend, everyone.